This is the MTPredictor weekly market update for February 9th. So we've got a lot of ground to cover today. We'll start with the S&P on the the monthly chart here. So I want to show you our decision point tool and why we're anticipating what we're anticipating in terms of the S&P and that correction, or the correction that we're in here now, and where we stand. So here was the September-October low that was coming in here, and you see the market rallied off of that level into what was the all-time high in October of 2007. Now if I go back to the lows here in October of 2002, I'm going to right click, I'm going to take our decision point tool here, and you can see this shaded area here at the bottom. You can see it's labeled decision point and monthly. What this is it's telling us that if the market, which was up in here at the time, if it does sell off down in this level, we should anticipate market needing to make a decision at this level, and initially as support. If they take it out to the downside, then we should anticipate more downside to the next major support. Alright, so we've had that level on the chart ahead of time, and what the market did was it came right, to the tick, to the support, right at the top end of the support, and that's where the rally began from. Now we have a new major swing high in here into this low, so we're going to take our decision point tool here again. Right click, I'm going to choose decision point, and this gives us a level of, if the market rallies, a level of major resistance in terms of the monthly chart here. Alright, so while the market went through its corrections, we did make it into this monthly decision point level, and again it's a level where, just as the market turned in this level, we would anticipate the market should correct in this level. Right, and we began to get that correction. Now let's go down to the daily chart, because we start with the higher time frame and then we come down. You can see here's that monthly major resistance on the higher time frame, from the higher time frame, and now we work our way down. So I'm just going to remove that level. We know it's there, we know we're in that level. Here's the daily chart now, and remember we talked about last week, we were we're in this level last week. Alright, this was the last swing into the high here. We take our decision point from the daily chart, and it gives us this level here. Remember last week I said I anticipated that we would potentially get selling early in the week into this level, at which point you can see we had a 1, 2, wave 3 down. So we were anticipating, in terms of a wave pattern, that we should correct back, and I projected the wave 4 target ahead of time, and you can see it's exactly what the market did. Alright, now if you were a buyer in this level, again we had the blue buyer's candle after the black candle here was neutral into the major daily support here. The blue buyers candles were telling us that the buyers are now overcoming the sellers. You see this red, what we call high volume spike on the black candle here. That was giving us a heads up at the close of this particular day that this may be professional buying stepping in here. That's why this turns red. It tells us there's unusual volume activity happening here while the market is selling off. What we want to see, though, is that next day this closed as a blue buyer's candle without making a new low there. So we took out a prior swing low, and this is what the pros love to do, is they take out a prior swing low and they get everybody that's looking at this as a breakdown or a breakout to the downside to be sellers in here. Creates a lot of liquidity, and the professionals step in and buy this, as evidenced by the blue buyers candle telling us that the buyers are now overcoming the sellers. Alright, so it's an area where you could be a buyer. Now, because it's a wave 3, we don't typically want to buy a wave 3 into wave 4, because there's probably not enough risk reward here if this ends up being the high of the move here before things roll over into wave 5. But if you were a buyer there at this point, well, we can even check the risk reward down here. Let's just see to this point here. Well, you've got twice your initial risk off of the candle here. Either one of these probably would have worked. And so, worst case, if you think this is going to run any further, Check our STF. The STF is not into the gray band at the top. In fact, it's into the gray band at the bottom here, which tells us there may be more downside ahead. So at that point, if you were long here, you'd want to have your stop to break even, or you'd be taking your profit. You've already got twice your initial risk as of Friday's close there. All right, so what we would anticipate now that we got the rally that we anticipated, is that the market may find resistance in here in this level, and we need to see a red seller's candle. So just as we saw buyers overcoming sellers in a support area, we need to see sellers overcoming buyers in a resistance area here. Similar to if we look at the wave 2 here. All right, here is the wave 2 level, and you can see here we had a red seller's candle indicating sellers were overcoming buyers in that resistance level, and market sold off. Now we have buyers overcoming sellers in a support. Right, we don't have sellers overcoming buyers in the resistance level. We do have an indication that there may be more downside ahead, but we need that confirmed before you look to set up a trade. Now we can project wave 5 down now. Let me clear the risk reward stuff here, and let's project wave 5 down now. So I'm going to use the wave price targets. I'm looking for down wave 5. I'll start at the significant high here, down to 1, up to 2, down to 3, to 4, and here's our minimum wave 5 and our typical wave 5 target here. So minimum wave 5 sits right around 1735. All right, so if you're going to get short on in terms of the daily chart, we got to wait and see if we got a red seller's candle in this level. And we can check and see also if we do get any high volume spike that comes in. We don't have anything there indicating that maybe professionals are stepping in and selling. So we'll see if a red seller's candle forms this week. If so, you can set up, if you've got enough, depending on the size of the candle and what the risk reward is to the initial target. If there's less than twice your initial risk, then you'd pass on that. Wait for this thing to go wave 5 down and then maybe look to be a buyer. Because we would anticipate if we do go wave 5 down here, we would anticipate we should get a correction back to the wave 4 DP, which would be up somewhere around 1800. Okay, so we'll see how that unfolds. Now let's take a peek at the Dow here, because you see the Dow is the same pattern, but the Dow hasn't quite reached. I'll go to the daily chart here, the Dow, and you can see the same analysis here that we were looking at last week. This had a 5-wave pattern up in the Dow here, and then we anticipate at a minimum it should correct back to the wave 4 DP. That's this level here. That correction unfolded as a 1, 2, 3. Here's your wave 4, right? And here's where the Dow closed around 15,739 on Friday. And we do have strength on the STF again to the downside. And so it's possible that this rally could be a little shallow with the S&P already in its wave 4 resistance, but we could also see the Dow have one last leg into wave 4 before everything begins to roll over. Again, if they take this area out to the upside, again, if you're going to trade in here, low risk, high reward setup, and so if your analysis is not correct, then you take the small loss. Because just because we have wave 4 here doesn't necessarily mean the market's going to stop there. The market's going to do what it's going to do, and it may just continue higher and take this level out, in which case if you trade in here you take the small loss, and then we'll reevaluate, and maybe if the trend is going to be up, we can be a buyer on a pullback. Alright, but right now here's what we see. Potential more strength to the downside, so this may be a just a wave 4 and then one last rollover into wave 5 before we get another correction back to the upside. All right, so we'll see how that plays out. We'll get more information this week, obviously. Let's just peek over at the DAX here. Again, the DAX, that same 5-wave pattern up right into typical wave 5 resistance, so we anticipate that correction back to the wave 4 DP, which is this level here. Now it overshot. I think our markets here in the U.S. kind of forced the overshoot here. When they overshoot like this, you always take the go back to wave 1 and take a decision point off of this level, and that's this level here in the DAX. So as the U.S. began to rally, again, strength to the downside on the STF in the DAX as well. So this may also end up rolling over again, and if so, we could see this area down here in the DAX, which would basically end up coinciding with wave 5 down in the US markets. All right, so we'll see how that unfolds or continues to unfold. All right, let's take a look at silver again on the weekly chart. So silver, remember we had our 5 waves up into almost that $50 level there. Again, after 5 waves, we anticipate here's wave 4. We're going to take our decision point off of wave 4 because when we're up here, we know that we should anticipate a correction at some point back to this level, which is what we got. Remember, we had this kind of descending triangle. Here was the bottom here with the descending lower succession of lower highs. They broke out of that level, the bottom or base broke out of that level, and then ended up forming the pattern here. Let's just take our Elliott wave tool here again in wave 4. So again, we see these patterns over and over again. We'll look at the NQ a little bit on a 3-minute chart, so you can see. Let me just stretch this out a little bit. All right, so what we were looking for, again, here's that wave 4. Remember when we look at the S&P, we're looking for that red seller's candle in wave 4. Well, it's going to look something like this if it forms. So here's a red seller's candle in wave 4, and those that were looking to be sellers of silver in this level had the red seller's candle to work off of, and then they needed the target, which is your wave 5 down. And let's go to the tools here, down wave 5. Again, we locate wave 1, the top candle that makes up the start of wave 1 here, down to bottom of wave 1, up to 2, down to 3, up to 4, and this projects our wave 5 target. There's the minimum wave 5 target. We can use our risk reward tool here to tell the software the entry we want, which is the red below the red candle, the stop, which will be above the red candle. So I click that again, and the third click is at the target here. And that gives us our target around 1750 to 1760, which is twice our initial risk, so that's good. That's the minimum that we'd look for. So if you're going to be a seller here, that would be acceptable. Again, we haven't gotten to the target yet. Because we've achieved this 100% initial risk line, that tells us on these bigger time frames that we can move our stop from the entry, from the initial position here at 2550 to the entry, 2290 or 23 if you wanted. And we'll see, again, I don't see the volume coming in here on these turns. You can see the big volume that comes in on these turns, big volume in the wave 4. I don't see that coming in here, so I'm not sure that this thing is, the rally is gonna last here. Still wondering if they're gonna roll over and get to this wave 5 before we get any type of rally back to the wave 4 DP. Again, we can have that on the chart ahead of time. So if we do go wave 5 down, we would anticipate this silver rallying back up maybe into this $25 level. So we'll see how this plays out. We'll be watching that one as well. All right, and last week we looked at this Australian dollar, US dollar. Let me clear all this off here because there's been some nice patterns unfolding here. If we look at the high here, I use the tool asking it, is there an Elliott wave pattern there that we might want to be aware of? Well, guess what? It rallied in a nice 5-wave pattern right into the typical wave 5 target. There's your red seller's candle, indicating sellers are now overcoming buyers. Again, we anticipate a correction back to the wave 4 DP. So if you're going to trade this, again, you're using a small risk and a high reward. All right, so a reward side of the equation of about 2.5 times what you're initially risking, that's acceptable. So there would be a location for a low risk, high reward trade setup. Again, we're using the Elliott wave patterns in isolation here, not trying to predict the market, but just saying if the market unfolds as we anticipate, it's going to give us an opportunity for a low risk, high reward scenario, and that's what we want to accomplish here. Now, interestingly, how did this form? This is what we were looking at on the way down here, because in fact, let's go to the weekly chart here for a second. Alright, here is the last swing low. I'm going to take our decision point. Remember, we use the higher time frame to map out support and resistance for our smaller time frame that we're going to trade on. And you can see that the sell-off was right into weekly decision point support, and the software actually gave a buy signal down here on the weekly chart because it also sees that we're in the support and it sees that we have divergence. So there's a lower low in price between this swing and the new swing low here, but a higher low in the oscillator. So the software sees that divergence in conjunction with a potential bottom, and it gives a signal there. But we're not going to necessarily trade off of this weekly time frame. We're going to trade off, let's say, the daily time frame. So let's see what the daily chart looks like at this level. All right, so we've come into this level. In fact, even back here, we can look and see, guess what? We're in wave 4. There's our red sellers candle telling us sellers are overcoming buyers in wave 4. So we should anticipate that the market is going to roll over into wave 5. There's no guarantees. So again, if we're going to trade it, if we're going to sell in wave 4, looking for wave 5, we'll give ourselves a target, which would be the minimum wave 5 target or this weekly DP support. We'll check the risk reward if it makes sense to the minimum target. It is. It's about 2.2R, it looks like. So 2 times the initial risk. So that would work. But once this sell is completed, now we don't want to be a seller anymore. Instead, we're looking to be a buyer here. And remember, we looked at this last week because we set up, if we're in wave 5, here's your first blue buyers candle here. So let's just put the waves back on here. Since we've gone right into the minimum wave 5 target there, we've got a blue buyers candle there telling us that the buyers are now overcoming the sellers in that minimum wave 5 support area. Where would we anticipate the rally to be after 5 waves? We anticipate a correction back to the wave 4 decision point. So we're going to take our decision point here, use our risk reward tool, entry, stop, target. Alright, software says if I wanted to do this, it would be 3 mini lots. In this case, this is a 4x pair. Risking $300. The target I've chosen is 3.7 times the initial risk, so that would be about $1,100 if I get to the target. Low risk, high reward, just using the Elliott wave to find those low risk, high reward scenarios. Alright, so you can see how that's playing out. Not to the target yet, and at this point you can certainly, we've gone beyond the 100% initial risk line, so you can have stops to break even there at 876. Right, and just to show you, I'm going to go to the NQ, the NASDAQ, on a 3-minute chart. You see that this stuff plays out over and over again, same patterns, different markets and time frames, but same patterns. So this is a 3-minute chart of the NQ. This was last week. We had a very nice setup that came up. If we go, now if we're trading off a 3-minute chart, we're going to go to the 15-minute chart to map out that major support and resistance. All right, again, ahead of time before the market gets into our levels. So let me go forward here. All right, now you see the software gave a nice buy signal here on the 15-minute chart. But let's go back and let's eliminate that right hand side there. Here was the last swing low. So at the time we take our decision point tool and it gave us this level of support. So even though the NQ is trading up here, we're saying if it does sell off down here, we anticipate obviously the trend would be down, but here we anticipate the trend may turn and become a trend back in the upward direction. So on this particular day when the market, in this case the NQ, came into this level on the 15-minute chart, we'd go down to our 3-minute chart because we'd be looking to be a buyer at that point. This is the chart that we want to trade off of. All right, so let's find that 15-minute level on our chart. Okay, here it is. So we could, we've got a blue buyer's candle here in the 15-minute support, so we could be a buyer at this level, or we can wait and wait for what we call our Holy Grail setup. So if this is a significant low, and we think it is because we're in a larger degree support from the higher time frame. So what we would then anticipate is, let's say we want to wait. We don't want to try to pick the bottom here. We want to wait, and we want to see if this does in fact rally off of this level, which it did, and then we want to be a buyer on a pullback. Well, what did Elliott say many years ago? He said, after a significant low, wait for the rally and then be a buyer on the first A, B, C correction. So if I choose the Elliott wave intermediate, actually when you choose the Elliott wave minor here, you'll see the A, B, and the C. After a significant low, wait for the rally, because why? We anticipate this may be wave 1, beginning of a new trend in the upward direction. Elliott said best time to be a buyer is wait for the first ABC correction, which would be wave 2. And what we're going to do here, now this is what the software has picked up. The software has seen this TS1 buy setup here is telling us that we have an ABC correction in wave 2. Here's the wave 2 support area. He says wave 2 or B. Well, we know this is a, or we expect that this is going to be a wave 2 because of the fact of the starting point is a significant low from the 15-minute chart. So instead of looking for A, B, and C, which the software, if we put the analysis on the trade setup that the software has given us, it gives us the minimum target. The software always checks to make sure there's at least twice the initial risk to the minimum target. But because we believe this is a wave 1 and this ABC correction is in wave 2, we're going to play for the wave 3 target because we're anticipating what we call our holy grail trade setup. So we're looking at the typical wave 3 as our target. So that turns what would have been a a 2R trade, what we call a 2R trade, twice our initial risk to the target. This one gives us 5 times our initial risk. Again, there's no guarantees in trading. We believe that the bottom was in, but this could have made a new low, and if so, then we lose small and controlled. But if we're correct, we're going to take out 5 times what we risk. So in this case, let's say $400 risk, about $2,000 at the target. All right, so it'll work. It doesn't matter, what the market or time frame. So as long as it's liquid, we're going to use the Elliott wave in isolation to pick out low risk, high reward scenarios. And I think you can see these patterns unfold. We looked at the daily charts, weekly, monthly, 3-minute. The same patterns unfold in all the different time frames. We just want to kind of coordinate them using the higher time frame to find the support and resistance, and then look for patterns at those levels on the smaller time frames where we can get low risk, high reward entries. All right, so we'll leave it there. Got economic data coming out this week. I think Janet Yellen will be speaking on Tuesday before the market opens, and that she's now the new Fed chief. So that I think people are going to be certainly paying attention to what she says and anything. She is a QE dove. So will we get any tapering to the tapering? Will we get more quantitative easing? What might be in the cards. Obviously, that's going to affect the market. So we'll see what we get this week. Keep your eye on the charts, and anything you get into, make it a low risk, high reward scenario. You can get more information at mtpredictor.us. Download the free introduction to MTPredictor. It'll cover all these things that I'm showing here on the charts, and you can do this yourself with the software. All right, have a great week, and we'll see you back next week.